This is a lecture from Open Tuition. To benefit from the lecture, you should download the free lecture notes from opentuition.com.
So let's move on and have a look at payments to charity under the gift aid scheme. Now, I have mentioned gift aid earlier, this is going to give you a lot more information about that. And obviously there is a whole pensions chapter, but I'm just going to give you the basics of how that works within the income tax computation. That's what we're focusing on in this chapter. So gift aid is a way of giving tax, it calls it here a tax efficient way of giving to charity. Okay, now for individuals who are basic rate taxpayers, the relief is automatic. Okay, because you pay the net figure. It's treated as being paid net of basic rate tax. So for example, to give a charity, it mentions here an example. You want to give the charity £100, you only have to pay 80. So this is you, that's the charity, that's HMRC. You give them £80, okay, and then the charity claim back £20 from HMRC, giving a total of 100. It's automatic. You don't need to show it anywhere in a tax computation. It doesn't affect tax computations at all. Never turns up in a tax computation. Now, the one thing to be careful with this, okay, is to make sure that you read the question carefully to see whether or not it says whether he paid it or whether it is the gross figure. If he paid it, then it's that net figure, okay, because that's what you paid, and therefore you have to gross it up, and you gross it up there by multiplying it by 100 and then dividing it by 80 to work out the gross figure. So just make sure, and I've written it there, read the information in the question carefully. You have to do that anyway, but particularly with this. Now, high rate taxpayers and additional rate taxpayers, they've already automatically had basic rate relief on that, but they need to get, a high rate taxpayer needs to get another 20%, and an additional rate taxpayer needs to get 25% extra relief. Now, we do this one way, by extending the basic rate band. So this is a working, it never appears in the computation. It's only ever a working. Okay, and it's best, like we did the working for the ANI, it's best also with this that you do the working at the bottom or the working at the top, whichever. Don't put them in between. You either do the answer. I think it's easier just to do the answer. Write the pro forma out, copy the question into the answer, then do your workings, then work out the tax. So we're going to have a look at example number 13 here of Elliot. Remember, read the question carefully, okay? He paid that to a charity, okay? So that's the net figure. So in order to, we need the gross figure in order to be able to extend the basic rate bands. So to gross it up, that £1,600 needs to be multiplied by 100 and divided by 80, which will give us £2,000. And that gross figure there is the figure that we use in our answer. Okay, so let's write this answer out and see what we come up with. Okay, are you ready? Pens at the ready. So, heading, Elliot's tax comp. Labels across the top. Now, he's only got one form of income, so you could probably get away with just one heading here. Pro forma down the side. His trading income. It's 53,000. Less his personal allowance of 12,570, giving him a taxable income of 40,430. Now that tells us straight away that he's a high rate taxpayer. So we need to do some workings. So working number 1 would be to extend his basic rate tax band. That's the normal limit. And we're going to add in that 2,000 that we worked out before, which is 1,600 times 100 over 80, just as a reminder, which means that the first £39,700 he now pays tax on at 20%, which is 7,940. So the balance of his income, there's your safety net, the balance of his income, just 730, he pays tax at 40%. So he saved himself 20% tax relief on those £2,000, giving a total tax liability of 8,232. Let's have a look at example number 14 now. Now there are several aspects in this. Okay. Trading income, way off. Okay. So you'd have to think of ANI. What is that? He's paid a charity figure, so that needs to go into the calculation. What's his personal allowance situation going to be? This is what he paid. So we'd need to gross that up and extend the basic and high rate tax bands. Now these two questions are much more likely to be section C questions because there's more depth, there's more, it's not just one thing that you're dealing with several things. So let's have a look at example number 14. So Thomas, from the question, £160,000 worth of income. Again, it headings, labels. I don't need to repeat that to you now. You know that, don't you? Personal allowance, note 1. Now it's a note here, okay? So you could either write, as I mentioned to you before, you can either write that down or you can do the working. Now, you notice here, his adjusted net income is his total income, which was 160,000, less that gross gift aid payment. So that's what he paid. It's been grossed up. So his actual net income, his adjusted net income is 152,000, which is still way over the 100,000, and therefore he doesn't get a personal allowance. Okay. So get into the habit when you're doing these things of setting the pro forma out. Labels across the top, pro forma down the side. Copy what you can, do the workings, put the working answers into your pro forma. Carry on with your calculations. So no personal allowance. Now, before you do this, okay, before you do that, you must do something else. You must extend those rate bands. And you'll notice here we've got some more workings. So these rate bands, there's the amount he paid, grossed up, and there's the basic rate band, which you can copy from the rates at the beginning. You don't have to remember them. Okay. So the basic rate band before he has to pay high rate is 45,700. The high rate band is now 158,000. So 45,700 is at basic rate. 112,300, and you look at notice number 3, which is that less that, which gives you the amount of 112,300. That's how much he pays at high rate. And then you've got additional rate tax at 45%, giving him a total liability of 54,960. And again, even though these things are obvious, it's obvious that he's not going to get any personal allowance. Do not ignore it. Show the workings and get the marks. It's important. You get marks. You don't get, see the answer there, 54,960. Won't be any marks for that. They're not interested in that. They're not interested in whether you can add up correctly, to be honest. What they're interested in is, do you know the rules? And the rule for here, there's a rule there. There's a rule there. And you've shown those down here. You've extended basic rate bands. Here, there's a rule. All of this here, all of that is a rule. And you've dealt with it correctly. Have you dealt with the rules correctly? So that's what's really important with that. Carrying on then. Section, example number 15. Kerry. Trade profits, so that's self-employment of 98,000, bank interest of 4, and dividend income. We are really going for it with this one. She paid interest on a loan to contribute capital, so she's going to get relief for that. So we're going to need 3 columns and the relief. We're going to have to work out ANI, whether she's going to get any personal allowance because she's made a payment to a charity. Again, so that's going to have to be grossed up, and we're going to have to extend the basic rate bands. Meaty question, this one. Meaty question. So let's have a look at the answer for that one. Lots of information, and this is why it's important. I keep emphasizing this. This is why it's important that you get into the habit of writing these pro formas. So you will get marks for getting to that point. Okay, you're not going to get massive marks, but you could get half of that, you could get half of that, half for that, and 1 for that. That's 2.5 marks, and all you've done is copy the question into the answer. But you've set the pro forma up. You would then leave a gap here. You know that that's got to be deducted from there. But then go away and do the working to see what the figure is that you need to put into there. Set it up. Get the labels right. Get used to getting the pro formas down the side, all the columns across. And when you've done that, you'll get more marks that way. So the trading income, these 3 have been copied from the question, and we've put the qualifying interest in before the personal allowance. Now let's go down and have a look at working number 1. Now before the gift aid payment, that would have caused a reduction, wouldn't it? But they made a gift aid payment. That's what they paid, and read the question carefully. It says that's what they paid. Gross it up and deduct it from here, which puts them below £100,000. This is quite common in an exam to see whether or not you're paying attention. Now, because that's below £100,000, get full personal allowance. So charity payments have benefited. They've got a full personal allowance there instead of having a personal allowance reduced. So they've saved tax there. And obviously the tax payment that the payment that they've made to the charity is going to extend the basic rate bands and the high rate bands, so they've saved tax there as well. So next question, set it out. Non-savings, savings, dividends, tax calculation. Go and work out the extension of the basic rate bands. So we're looking here at 37,700 plus 6, which is 43,700. And that's the basic rate. Do them both. High rate is 150,000 plus 6 is 156. Show the workings, show everything. Always show your workings. It's that. Those are the rules. You've applied the rules. Get yourself credit for it, for doing it. So, non-savings income was 82,430. The first 43,000 is at basic rate with the extended rate band. The balance of it is at high rate. Deal with that first. So we deal with that first. Second, savings. Question ourselves. This income isn't in the first 5,000, so we're not going to get the 0% on the first 5,000. This is a high rate taxpayer, so the high rate savings nil rate band is £500. That's what they're entitled to. Total is 4, so the balance of that is taxed at still at high rate. It's not additional rate taxpayer. Dividends. So third one, rules. Think rules. The rule is £2,000, nil rate band for dividends. No tax on those first two. The balance of that 6 is 4 in the rates. Check it out. Make sure you read it carefully. Giving a total liability of 26,982. Complex questions. Go back, read through the rules, read through the notes, and then read through the question. Because this is a recorded lecture, you can go back, pause it, listen to me again. Go back, pause it. If you want to, listen to me a third time. Okay. Plenty of resources there for you to deal with. Okay. Jointly owned assets, where you've got married couple or civil partners. They are two separate people. However, sometimes married couples, civil partners, they have jointly owned assets. It's always split 50-50. Always split 50-50, unless you make a joint election to split it differently. Okay? Unless you make an election, you must apply to the revenue for it to be elected as being held differently. Now this example here, it's a discussion, and I'm going to show you the answer so you can see that. So Elton is a high rate taxpayer, has an adjusted net income of I can never do the greater than. I think that's greater than 100,000. This includes 20,000 of rental income of a property owned entirely by Elton, on which he pays 40% tax. David is his civil partner, has no income. Okay, so that's an unbalanced couple situation as far as tax is concerned. And within the law, there are several things that you can do to reduce their income tax liability. And obviously it has to be legal. So let's have a look at 16 and see what we've got here. Never be black and white with this. because obviously clients would need to be consulted. You've got to make sure it's all within the law and whatever. So you'll notice that there's a there say potentially. So if Elton transfers, say, 5% of his holding to David, they will automatically be treated as jointly owning the property for tax purposes, and each will be taxed on 50% of the income. Elton's liability would be reduced by 10,000 at 40% because the income was 20. And then David's income tax liability, he's not going to pay any tax on it at all because it's covered by his personal allowance. And it would save them 4,000. If they transferred so either do 50-50, and that saves them 4,000. If they transferred the entire ownership, all of it would be assessed on David. Okay, so that would be 20,000 minus 12,570. Okay, then that balancing figure there would be taxed at 20%. 7,430, isn't it? 7,430 at 20%, giving them a tax bill of that. Okay, and it would it says compared to Elton's current tax liability on the property, which is £8,000, achieving a tax saving of 6,514. So if you've got to make a comparison like that, then just do both sets of calculations. Some people are better with words than other people. If in doubt, do the maths. Do the maths first, show the computations, and then the numbers will speak for you. Okay, that's important that you get the numbers to speak for you. One further thing for families, which often comes up in the in computations, is the child benefit income tax charge. Now, child benefit talks about it here. It's a tax-free benefit payable to parents, irrespective of the level of the taxpayer they may be. However, now they've introduced this income tax charge, which applies if the taxpayer or the partner, one of them, has an ANI over £50,000. Not 100, but 50. You work out the ANI in exactly the same way as we've done before. They will then be given this income tax charge. So it goes at the bottom of the tax liability. Now, again, this information is given to you in the tax rates. That's the rule. You don't have to remember it. It's in the tax rates, fully written out. All you have to do is apply that rule to the situation that you find yourself in. And we have two illustrations here which explain this. So Catherine has child benefit of 1,056 with an ANI of 54,000. As her ANI is between 50 and 60,000, the child benefit tax charge is £422, which is 1,056 at 40%. Okay, that's how they calculate that one. Now, in the illustration number 2, Victoria received child benefit of £3,147 in respect of her children. She's got 4 of them, with an ANI of 77,000. Now, her income exceeds that limit. Therefore, she will be taxed in full on the £3,147, and she'll pay tax on that. It's rare to find one of those in a big income tax computation because that's taking it one step too far. This could be a multiple choice question. So if you get a multiple choice question with a child benefit, read the rule, apply the rule to the question, do the maths, and one of the 4 answers, A, B, C or D, will be the maths that you've just worked out.